Okay, traders. Now, let me just give you a quick 101 on how to trade the economic data releases, right? These are called the fundamentals, or a key aspect of the fundamentals. Now, all these economic numbers, they go into a big basket that the central bank sort of muddles over, looks at the economic activity in the market, and then determines what they're going to do with interest rates. They are a key indicator as such for the central bank activity. And that's why the market trades them very aggressively. Because if we see shifts in, say, GDP numbers or employment numbers or inflation numbers, it tells us exactly what impact that's going to have with the central bank and on future interest rate moves. Now, this is by no means a detailed approach, but it's very simple, right? I just want you to get the core concept. Once you sign up for the course or one of our funded program, you'll get access to our full day trading masterclass, and we go into huge in-depth analysis on this. Now, there's just two key components you need to understand: the actual and the consensus, okay, or otherwise called the expected number. The previous number doesn't really come into it, okay? So I'm using Just Trading Economics here, a free service that you can access. Now, looking at the numbers, right, and these ones that are highlighted in red, right, the time, they are like a three-tier, very high impacting numbers, as you would expect from a GDP number. Now, I can go through the various instruments here and quickly work out whether these things went up or down, okay? The UK GDP expected at minus 0.2, came out at minus 0.5, okay? Worse than expected. What happens? Sterling goes down. It's as simple as that. And you can factor in not only the GDP numbers, but also coming out at the same time, industrial production numbers, slightly worse than the consensus, another forcing factor for it to go lower. US inflation numbers, okay, the forecast, 0.2. The actual number came out at 0.3. That's a positive, right? And the year-on-year, 3.7 versus 3.6. Two overriding positive numbers. The US dollar would go up in that scenario. Okay, and this is the same for all the economic numbers. Now, when you are trading the economic numbers, it's important to understand the numbers are sort of weighted differently. There's the third tier numbers, which are low impacting. Okay, if I get those up, you'll see there's a huge amount of them. The second tier numbers, okay, high impacting. I would call the very high impacting numbers, inflation numbers, central bank announcements, retail sales, GDP, those sorts of things. Well, these are the core numbers that the central banks really gravitate towards to and reference in their statements. So they have greater importance. And you can actually sort of see how these economies are trending based off the numbers. Now, don't get me wrong, trading all economic numbers is a sort of a recipe for disaster. But even if you're not trading the numbers, you can look at these numbers, get the direction, see if that lines up with the technical view in the market. If it does, well, it's going to give you confidence to get into that trade and trade with the market, right? You can take it to the next level and actually trade these releases aggressively, especially if you have a technical setup. It takes extra skills, and that's what our day trading masterclass is all about, giving you those skills and the trade execution tools so you can get into the trade sooner than later, right? But just on the basis of it, it's actual versus forecast. And that's where you need to sort of focus your attention and check it out. For the next week or so, why not get up your calendar, look at the high impacting numbers, look at the expectations, see if the actual number is higher or lower, and see if that moves the currencies in those directions. I think you'll find more often than not it does. And that'll give you the confidence to probably explore a little bit further to increase your risk profile, maybe trade these events or trade just after the releases, right? Once you get into the actual fundamentals and understand how these work, well, I tell you what, you're on the road to becoming a professional trader. You can trade all instruments, all market conditions, and be able to utilize the high momentum directional economic data releases. Good luck.